Hi, good morning. You're watching the market right here on ET Now, and we've nicely managed to gain momentum for a sixth consecutive session. Yesterday was no different, although yes, you could crib about the fact that we didn't quite latch on to the session highs and eased off from there. But at 17,600, it's a pretty comfortable print for the index. And FIIs as well, they remain biased for an 8th straight day. The average FII buying, in fact, since March 28th has been roughly around 750 odd crore rupees. No more what we have been used to in the past, but that said, it's comfortable and they're at least back into India equity markets. And I think now this week, the focus is all about earnings and starting off with IT as always.
You know, Rasha, we are up about 3% from the recent low. In percentage term, about 1,500 points on the bank Nifty, about 600 points on the Nifty. That's a decent comeback. But the decent comeback has not surprised everybody because the decks were pretty much aligned that markets were oversold. Globally, the ripple what we saw in the US regional banks, that ripple is perhaps behind us logically if you think through it. Third, the positioning of Indian markets in terms of risk-reward ratio stroke valuation, I guess at the beginning of April and the March end was more favorable. So nobody is surprised. Everyone surely is delighted with this kind of a rally. Now, the first leg of any oversold market is that you will see a bout of short covering. And we've seen 6 days of straight line short covering, which means that the short sellers now have covered their positions or they've decided to change the trade. But has the trade orientation changed? Which is that a market where you are selling on every uptick, does it become a buy on decline market, or this market may not give you a decline, you have to buy the market now? That is something which we'll figure out in the next couple of days. My sense is that we could be in for a surprise rather than disappointment. Everyone knows that IT companies will have big set of numbers. But I guess markets are underestimating the fact that inflation and commodity prices have peaked out, and there could be a distinct shift in the commentary from managements when they will be sharing and spelling out their forward-looking outlook in terms of margin and demand. So I'm more optimistic purely because the fact that IT will come out with bad set of numbers, everybody knows it. The fact that commodity prices have peaked out and margins will start expanding, nobody is talking about it.
Yep, that's what it is when it comes to the markets. And a quick check-in on what the global screen looks like. It was mixed when it comes to Wall Street. You have the investors also awaiting that CPI print. You have the Asian markets. Well, it's pretty much in the green this morning, and that's largely ahead of the Bank of Korea. They came out with their overall decision as well. And interestingly, you've got Bitcoin, which has rallied quite smartly above the $30,000 print. The SGX Nifty as well holding out in the green. And Nikunj, you were talking about IT as well. So let's just discuss in further detail in terms of what exactly is in store, because there is an expectation that the margins this time around could expand on a sequential basis. But by and large, it's expected to be muted growth, which you said the street already seems to be prepared for.
Yeah, I mean, even it's like saying the Panwala on the street is also talking about the IT companies are going through a difficult period. This was the same sector exactly a year ago where everyone thought that nothing could go wrong, and COVID in a sense had rebooted the fundamentals for the entire IT sector per se. So the pendulum has completely swung from extreme bullishness now to extreme bearishness. Look, it's not going to be a great year for IT stocks, but a lot of IT stocks I think have already fallen. Where you may see this earnings season slightly differentiated. There was a time in 2021 where it was a rising tide phenomenon and everything in the IT space just went higher. Mid cap, large cap, small cap. It was important that as long as it had a digital overplay, that stock was doing very well. I guess there is going to be a shift there. And within the top 4 also, I think there is going to be a shift there. TCS, I think, is still a comfort stock, but expensive. Infosys is attractive but could be a play on recovery. Wipro, I think, is at the bottom of the barrel, and I don't think you will get anything big there. And Tech Mahindra becomes a hope stock largely because of change in management. So depending on the positioning you want, I guess IT in a sense this time, it's more like a buffet spread where you'll have to choose what you want to buy rather than, having a universal approach.
Yeah. Okay, that's Bitcoin in trade for you. It's managed to already top that 30,000 mark. Let's take a look at the SGX Nifty. Comfortable again. It's indicating of a price level above that 17,700 mark. But remember, this week as well is a truncated one. So let's see which way, the global news flow and the global markets actually pan out. But it's a comfortable handover from the global cues as well this morning. That said, the big interview awaits. We've got Axis Bank CEO speak with us exclusively. So let's get you a glimpse of that conversation coming up later on in the show.
Mr. Chaudhary, every time when we've spoken to the management and the promoters of companies, they said, look, we don't look at the stock price. It is a function of market, and market is something which is based on sentiment, valuation, a lot of multiple factors, and we grant it to them. But for bankers, it's important to look at the stock price because that's how you raise capital. Do you look at your stock price every day?
No, I don't. I've learned the hard way. There's no point in looking at the stock price. Yes, obviously when you're growing and you're growing at a pace where you're consuming capital, you do need to raise stock price. In the 3.5 years I've been here, we have raised capital twice, 22,500 crores. That's not a small sum of money. We have just acquired Citi, paid 11,600 crores for it. And if we continue to grow at a certain pace, at some stage in the future, sometime we might have to raise capital. Don't see the need now, but sometime we might have to raise capital. So yes, in that sense, the stock price is important. In that sense, you want to raise it at the right time, at the right price, so that the existing shareholders also benefit. And you also give an opportunity to the new shareholders to make money if you leave some room for the stock price to grow. But no, definitely don't watch it every day.
This is something I've not discussed with Mr. Chaudhary, so this is going to be straight out of his gut. Aditya Puri.
World-class franchise builder.
Shaktikanta Das.
Strong, steady hand.
Infosys, when you're managing Progeon.
Oh, one of the best times I had.
HDFC Life.
Another great innings for me, a lot of learning.
Axis Bank, HDFC Life, Infosys, best stock to buy.
Obviously Axis Bank. What else am I supposed to say?
Axis Bank, what's the first thing that comes to your mind?
Thoroughly enjoying it, looking forward to more.
Extension? Chat GTP.
Interesting and worrisome.
When you're not thinking, what are you doing?
Oh, listening to music, reading books.
One book which you've read again and again.
No, I'm not there as yet, but I need to read a book again and again. No. Enough books to read.
Which is your all-time favorite book?
Rise and Fall of the Third Reich, because I think it gave me a very different perspective on what the World War was about. I used to be a great Osho fan, so a number of Osho books were quite revealing.
What's that one thing you think has been the most challenging time for you in your current tenure?
Well, I think the acquisition of Citi was quite challenging because we did it at a time when, firstly we did it in a time frame which was shorter than what we had told the market. This institution has been around for 120 years, deal of a lifetime. We got 97% of employees to come and join us. The day one went extremely well. Looking forward to the next 12 months when we'll have transitioned the customers to Axis Bank platform. Very, very complex deal, not difficult, complex deal. And I think I'm very happy that we have done a great job till now. I think half of it is over. The more important half is still to be done.
right, we got a full house, but will it be full house for the bulls also? I mean, are we now reaching that point where the bout of short covering, which has fueled a 1500 point rally or a 1500 point move on the bank Nifty and a 600 point move on the Nifty, is that behind us? Let's take that point forward. So Kunal, 3%, the recovery or the rally or the bout of short covering, that has happened. What happens now? Will markets move into sideways consolidation, or there is real momentum here?
So the momentum is very strong, but even in phases of strong momentum, there are always phases of pauses or phases of silent moves for the indices where the index remains into a range and the action shifts towards very specific kind of stocks and sectors. So in that kind of a pause is where we see the market, the mid cap and the small cap into the market tending to outperform a bit. Now the data is also very intriguing, Nikunj, because over the last 5 or 6 days, from the time we've seen the recovery for the index, there has been a massive amount of short covering. It went to so the markets went to a short covering mode on the RBI policy day. Even on a day like yesterday, where there was a muted kind of a price action for the indices, both the Nifty and the Bank Nifty. Nifty was up marginally, Bank Nifty was down some 200 odd points. But the open interest still, we managed to see some reduction. So there was a 5% drop in the OI on the Nifty, I think more than 8.5% drop in the OI on the Bank Nifty. And this comes at a point where the premium is also not very high for the indices. So the premium is, I think, 45, 50 points for the Nifty and some 150, 200 points for the Bank Nifty, which is more or less 0.5% odd. Now, that itself tells you that the market construct is getting into a tilt of more of a pause for the indices. We would not probably expect a major kind of an upward move on the index, but then this silent phase of pause or a consolidation would still be termed healthy. Now, the two resistances that the markets have established, 17,700 on the Nifty and 41,000, 41,050 on the Bank Nifty. These are the two levels to watch out for on the upside. Whenever we see a breakout of these two levels is where we expect momentum to come back again into the index.
Right. Naresh, hi, morning. How is it that you're looking at the market landscape?
So we are getting into a phase where a couple of days of pause, given that we've bounced back from 16,800 almost closer to 17,700. Some bit of a pause is normal. And this pause is something like a drifting upwards pause. It's not something where we correct a lot. So possibly we could get into a range of 17,400 to 17,800 or maybe even 17,500 to 17,800. So for me, going forward, 17,800 becomes a crucial price point, which earlier used to be a support, then a resistance. Once we start crossing above 17,800, that is where the momentum again gets back into the markets. So till this zone of 7,500, 800, time to be focused more on specific stocks. The mid caps and the small caps have a lot to catch up, and there are a lot of stocks where there is a lot of catch up, and we are seeing a lot of moves very different. So we have capital good names like L&T hitting new highs, but you have IT still struggling. So time to be more stock specific.
Sure, let's get stock specific then. On that note, Naresh, what's on your list?
So we'll be going with a buy on UPL Limited. Now this is a stock which has gone nowhere, but it has given a short-term breakout above that 720 mark. Seen good momentum over the last 3-4 sessions. A quick trade towards 780, which is the recent swing high. A stop loss to be kept at 728. Second is a medium-term bet on Bharat Electronics Limited. The stock earlier gave a breakout above 85.90 levels, went up to 115. Did a retest of 85.90. Spent a lot of time out here in the last couple of months. Then we saw this one-day move wherein the stock saw a good volume jump up, post the order inflows, and then it has sustained above those levels. So that's an indication the market has digested the news and is looking forward to more. The last 2 months highs of 98, 99 has been crossed. That indicates momentum is fairly in place as well as relative strength. Expecting this to go towards a new all-time high. So a target price of 115 and more. A stop loss to be kept at 94.
All right, Kunal, let's find out what exactly is making it to your list this morning.
So I'm betting on a few mix of large caps and mid caps. Tata Chemical is something which I would bet on. Stock crossing about the 1,000 levels, swing breakout on the daily charts for Tata Chemical. So would suggest a buy, 1,035 as a target, stop loss at 980. And RBL Bank is something which has popped up on the charts. Very interesting patterns over here. Inverted head and shoulder for the stock on the daily time frame. On the verge of a breakout of this inverted head and shoulder pattern, which is almost like a 8 to 9 rupee pattern for the stock price. So expecting an up move and a potential breakout over the near term, 152 as a target, stop loss at 140.
Right, okay, let's get stock specific and find out what's in focus this morning. And Kotak Bank is going to be definitely on our radars as its FII holding has now declined by almost 1.5%, which could actually lead to foreign headroom moving to 25%. In fact, Nuvama has stated that it actually sees a possibility of higher weightage in the MSCI index as well in the month of May 2023 review. Somit joins in to explain exactly what this means for Kotak Bank. Somit?
Well, if you see the March 2023 shareholding pattern that has been declared by Kotak Mahindra Bank, what we're understanding is that the foreign holding in the bank, that is the FI holding in the bank, has declined by around 1.47 percentage points to close to 41.22%. Now, this could result into headroom for the FI holding increasing to around 25.05% versus the earlier limit of around 22.38%. Now, as per the MSCI rule, if the foreign headroom is less than 25% but equal to a higher than 15%, then the price adjustment factor stands at around 0.5 times. But given that, and this was the case for Kotak Mahindra Bank so far, but given that the FI headroom for Kotak Mahindra Bank has now just increased above the 25% mark, the price adjustment factor for Kotak Mahindra Bank would now be around 1 time. Now, as per MSCI, as per the shareholding that has been released, there is a high probability that the price adjustment factor could be adjusted for Kotak Mahindra Bank in the May 2023 review, and there is a high probability that the weightage of Kotak Mahindra Bank in the MSCI index could increase. Now, as per Nuvama, the potential increase in weightage could lead to an inflow of close to $690 million US, and the stock has been languishing in trade, and this could be an upside trigger, that is the MSCI inflow could be an upside trigger for Kotak Mahindra Bank. Now, apart from Kotak Mahindra Bank, there are also a host of other stocks that would remain in focus because of the MSCI May 2023 review. Firstly, there is a possibility that ACC might be removed if the stock continues to trade below the 1,730 rupees mark. Hindustan Aeronautics has a high probability of inclusion, whereas Indus Towers has a high probability of exclusion from the MSCI index. And lastly, if you see, Power Finance also remains in focus, because if that stock continues to trade above the 160 rupees mark, then there is a high probability of the stock getting included in the MSCI index.
Thanks very much, Somit, for giving us those details. Let's put the spotlight on Bajaj Auto as well. It's set to take over all of Triumph's motorcycle sales and marketing operations in India. Remember, Triumph's operations will be the 5th dealer now under Bajaj, joining KTM, Chetak Electric and Bajaj's 2- and 3-wheeler business. Let's bring on board then Ashesha with all those details. Ashesha?
Auto is in focus today. This announcement actually came in yesterday, where they informed the exchanges that they will be managing existing dealerships of Triumph in India. Triumph has about 15 dealerships at the moment in India, and Bajaj Auto intends to take the number of dealerships above 120 over the next 2-year period. They say Bajaj Auto will manage Triumph's India sales as well as marketing operations. Let's also understand what this deal means for Bajaj Auto. Remember, Bajaj Auto already has 4 exclusive dealership networks here in India. Triumph dealership will be the 5th exclusive dealership network under the Bajaj Auto brand group. New mid-size Triumph motorcycles are set for 2023 launch, and the notification also says that bikes will be built at Bajaj Auto's Chakan plant, and these bikes will also be exported. So on the back of this note, we have a brokerage report that has come in. Morgan Stanley has come out with a note where they say that Bajaj will initially focus on creating a pull brand rather than focusing on volume brush. They say in a bull case, Triumph can add about 397 rupees per share to Bajaj Auto, which indicates 10% upside from the current market price. They expect Triumph to reach about 30% market share by FY26. Monthly run rate of about 39,000 units and margins at 25%. So on the back of this note that has come in from Morgan Stanley and acquisition, this particular counter will be in focus today.
Right, Ashesha, we'll leave it at that. Let's also hear it out then from Samir Arora from Helios Capital. He says that Paytm and Zomato, among all the urban consumption listed companies, is what he likes.
We have 2 names in these 25 names, which are Paytm and Zomato. Paytm, of course, we have got good timing, so we are up some 20-25%. Zomato, we were up and then it went back, so now we are 0. But both these are big brands, big survivors. And although, like for example, you read recently that Reliance is coming into cosmetics, or trying to compete with Nykaa and stuff like that, nobody is going to announce, new person is going to say that we are going into food delivery or going into even payment business so easily. And therefore, these guys are now in a place where previously there may have been 20 guys, and now they are, in the case of food delivery, down to 2. And there is no way a third guy can come in. And in this, one of the two is unlisted. And if they compete too hard and think that by getting a few more market share points here or there, they can have a hope of getting listed, that also does not work unless Zomato does well. So I think that the steady state solution will be that Swiggy will back off, let the Zomato win a little bit in the market, so that some years or months later, maybe 1 year later, it can hope to go public. Otherwise, it can keep fighting without having ability to get listed, because the market will not accept a second name in exactly the same business with nearly exactly the same market share.
Sameer Arora there sharing his outlook on the entire new age tech space. Let's move on then, and specialty chemicals manufacturer Neogen is going to be in the focus yet again today, as the company has gone ahead and inked the pact with Japan's Mitsubishi Chemicals for acquiring a tech license to manufacture electrolytes in India. And in fact, we've got then my colleague Lisa, who's joining in with all those details. Lisa.
Well, yes, the ET Now news break has been confirmed, as the Neogen Chemical has officially confirmed that they have signed an agreement with the JV-based MU Ionic Solutions Corporation, which is a JV of Mitsubishi Chemicals, and they'll be acquiring confidential manufacturing technology for manufacturing electrolytes in India. Well, they have the license to produce around 30,000 tons per annum of electrolytes in India, and the commercial production for the same will start in 2025. Well, the management commented that the electrolytes will be sold only in India, and the technology will be applicable to support most of the chemistries of lithium cathodes, that is the LFP, as well as the nickel-based and manganese-based lithium cathodes. Well, it's important to know that the company had recently announced a 450 crore capex for electrolytes and salt, and they were envisaging around 10,000 metric tons of capacity for the same. And the company had guided at around revenue guidance of around 1,000 crore in FY 25-26. So it looks like the company has to revisit the capex guidance as well as the revenue going forward. So the analyst also believes that this is a landmark positive step for the company. However, the financial implications of the same, it's too early to devise the same. And it looks like it has started a pace for battery manufacturing going forward, and it will also help battery manufacturing companies like Gujarat Fluorochemicals as well as Tatva Chintan.
Right. Okay, we'll leave it at that, Lisa. In the meantime, MTAR Technologies held its management meet. The company has reaffirmed its guidance of 45 to 50% revenue growth for FY24. Sharad is here with the takeaways.
Well, yes, the stock is in focus, and do remember the stock deals in the niche category of manufacturing, and the entire focus is coming especially on the clean energy segment. Now that roughly contributes almost 65% of the total aggregate book order of almost 1,200 odd crore rupees, and the management has stated that this will be the fastest growing segment going ahead, and they are also planning to foray into the energy storage systems. Now that requires a capital outlay of roughly 150 to 200 odd crore rupees over the next 2 years. Apart from this, strong management commentary also coming in, especially when it comes to the new orders in the nuclear segment. They are expected to kick in from the first quarter of FY24. Apart from this, the company itself is actually working on new technologies for the hydrogen electrolyzer. Do remember, this is basically a clean energy segment component going ahead, and this will be actually functional for the next 18 months where the company will be working on this technology. Apart from this, the company will also ramp up its electrolyzer production. Now this is expected to happen from the end FY24 and to also make fuel cells by FY26. And lastly, they have reaffirmed the guidance when it comes to growth of almost 45 to 50% in terms of revenue, and this will be led by fuel cells, space, as well as the nuclear segments. Now, of course, do remember the stock itself has also been buzzing, and over the last 6 sessions, the stock is up 9%.
All right, Sharad, thanks very much for those details. Meantime, moving on to more news and updates, Ukraine's first deputy foreign minister has arrived in New Delhi on a 4-day visit, marking the first official visit of the East European countries since the beginning of the Russia-Ukraine conflict just last year. During this visit, the Ukraine minister is expected to discuss bilateral relations, exchange views on the current situation in Ukraine, as well as global issues of mutual interest. Let's listen in to the conversation with Times Network's Shrinjay Chaudhary.
Crimea, and we all as a humanity in my country was not strong enough to give proper response to aggression of Putin. So the lesson is simple: whenever evil is not stopped, it becomes bigger. So I think that we have to learn this lesson. And going back to your question, of course the invitation to visit Ukraine for Prime Minister is there. There is a request for the phone conversation between our leaders, between President Zelensky and Narendra Modi, and I hope that he will personally invite Prime Minister to pay his visit to Kiev, as well as other senior officials, for example, National Security Advisor Mr. Daval, who has a very active interaction with his counterpartner Mr. Yermak, who is the head of the presidential office. So we have to state that there is a need for the intensification of a political dialogue, especially with regards to the G20 presidency, when we have India, a country that is playing and will be playing a greater role globally. It's not a case for India to escape this discussion. So I think that by having and taking this role of a global leader, India is expected to pay proper attention to the situation that is not regional, even though it might seem that this war is distant and is not about Indian people. It is, because the repercussion of the war can be felt in every part of the globe, with the food insecurity that is a result of this war, with the energy prices that is a result of this war, with the nuclear blackmail, when no one can be secured, when bigger attacks smaller, and other leaders might be also seduced, watching if impunity is there. If Putin is allowed to do his crimes, we have other leaders who might do the same. So I think it's crucial for Indian people to understand that it's about all of us. It's our common responsibility.
Did you? Okay, let's move on. Let's get back to markets. While it's indicative of a mildly positive start, here's Neeraj Diwan telling us why he continues to bet big on DLF and that's a stock that you can buy even at the current levels.
If you look at DLF, the kind of, the sales that they're able to do, the recent project which came a lot in the news where they sold 1,100 odd apartments in just 2-3 days. They were each priced at 7.5 crores around. So there is on the ground, as far as the luxury or the higher end apartments are concerned, there is no slowdown as of now. I think there is some slowdown which is there in the low category one or maybe sub 50 lakhs one. But see, demand wise, there's no issue as of now. But I think as far as interest rate sensors are concerned, which of course real estate is an interest rate sensitive sector, I think one needs to wait maybe some more time, maybe get another inflation data, because we saw a last inflation data also, which was a dampener to what people are expecting as far as the interest rate movement is concerned. So I think let's see one more data. I think if you see some respite happening there, then I think real estate is due for a rally from these levels, because most of the stocks have corrected and still they are 10, 15%, 20% below the high that they saw just a few months back. So I think it's due for a rally, but the real rally will come in only once you get some data point as far as inflation is concerned, if there's some easing happening there.
The headquarters of Axis Bank with Amitabh Chaudhary in this episode of See You at Work. So Mr. Chaudhary, from survival to revival and now flourish?
I think the opportunities ahead of us are even more. And as India starts flourishing as an economy, as this is what everyone is predicting, I think today Axis Bank has a great platform to build on that and hopefully change our ranking and what impact we're able to make in the marketplace over a period of time. So looking forward to it.
Well, counting down to earnings, and it's going to be all about IT, right? And the big question is whether margins are going to be in recovery mode for the sector, and is the worst behind us? TCS and Infosys will soon be kicking off the fourth quarter numbers with their earnings. Let me take it across to Anisha to find out what to expect.
On a constant currency basis, the growth can be anywhere from a decline of around 0.5% to a growth of almost 1%, while TCS is expected to be the leader of the pack with an outperformance coming in with respect to the revenue growth. That's the expectations from Jefferies. However, the valuations have become a lot more comfortable. So TCS as well as Infosys for you on the screen are trading below the 5-year averages, wherein the likes of HCL Tech, Tech Mahindra, Wipro too are a bit comfortable close to the 5-year average. So there is a bit of room available. And if you compare it with the valuations that were there in the year 2022, there's a massive upside available on the counter. So going a bit muted into the earnings, let's see whether they are surprised positively or continue to move on the downside.
All right, that's a view coming in on the IT sector and the outlook on valuations as well. Thanks, Anisha, for that. Moving right on then, FII flows, they have remained net negative in the second half of March, that is, with financial services seeing the largest outflows. But capital goods have seen the second consecutive fortnightly inflows. Let's bring on board then Somit, who has those details. Somit?
Well, if you see in the second half of March 2023, the FII flow was net negative at around $564 million, and the net outflows for the first quarter of 2023 stood at close to $3.2 billion, and this is despite the big bulk buying that we had seen in Adani Group stocks by GQG Capital. Now, in the second half, if you see, the energy sector has seen the largest outflow of close to $550 million, followed by the IT sector. Now, interestingly, if you see in the IT sector, the FII underweight stance as compared to the MSCI has reduced, which indicates that there has been a slowdown in selling by the FIIs over this counter. Now, currently, if you see, the FII holding in the IT sector stands at close to 11%, which is significantly lower compared to its last 3-year average, which stood at close to 12.8%. Now, financial service was the another sector that saw an outflow of close to $407 million in the second half of March 2023, while the FII ownership in stance, if you see, is currently overweight as compared to the MSCI. However, that has declined by around 15 basis points. That is, the overweight stance has declined by around 15 basis points. Now, the overweight stance has been continuously declining since its peak that we had seen in mid-Feb at close to 8.4%, and currently it's at around its 6-month average levels at the current moment. Now, on the inflow side, if you see, capital goods, materials and FMCG sector saw inflows from FIIs for the second consecutive fortnight, and FIIs continue to remain overweight when it comes to the capital goods sector, while they are underweight on materials and FMCG. Now, given that the financial year has also ended in FY23, if you see, FIIs have pulled out more than $5 billion from the Indian market. IT sector has seen the biggest outflow at close to $6.5 billion, followed by energy sector and financial, while on the inflow side, capital goods saw the largest inflow of close to $3.1 billion, followed by FMCG and healthcare.
All right, those are some of the sectors that are in and out of favor with the FIIs. Thanks, Somit, for that. Moving right on, in the latest edition of CEO at Work, we caught up with Axis Bank's MD and CEO Amitabh Chaudhry to understand the way forward for the industry as well as the fourth largest private bank in the country. He says he remains confident about gaining market share across segments. Listen in.
At any point in time, if given, for example, let's take Axis as a case, our market share in deposits is close to 5%, our market share in advances is close to 6%. Should I really be worried about, whether can I gain market share and can I do better than the industry? Well, if my platform is right, my strategy is right, I'm executing well, I should be able to gain market share, which should reflect in my increased profitability, which should reflect in being able to maintain margins. Now, this is subject to some number of factors I mentioned. And that's what I'm telling people within Axis, that if we have worked so hard to get the platform to this level, we should be able to, given where we are, should be able to build on it and do better than what we've done in the past. Why should I worry so much about whether 100 is going to 106.5 or is it going to 107 or 108? There is enough to be taken from 100 itself. And that's what we should be focused on.
So the basic thumb rule for Axis Bank historically has been that it's at a multiplier of 1.5. Will that be the thumb rule going forward as well?
Well, as I said, End of the day, when we talk about ranking also has somewhere market capitalization built in. So yeah, we would like ourselves to be rated at similar levels as some of my friendly banks are. We have work to do. Market needs to be convinced. And if the market is convinced, hopefully it will get re-rated on some day. I think we have to still do a lot of work, establish sustainability, more credibility. And as we do that, hopefully it will reflect in our multiples also. Till then, have to keep working hard.
Chakri Lokpe joins us now. Let's take a conversation forward with him. Chakri, we've had a 600-point rally on the Nifty, 1,500 points on the Bank Nifty. Is this as good as it gets?
I think we go much higher, assuming there are no more other shocks, but because valuations are clearly on the side, and also the fundamentals in terms of improvement in business conditions in various sectors is evident, whether it's industrials or whether it's banking. So that way, I think therefore the rally can continue.
Okay, meantime, Chakri, wanted to get in your outlook as well as to where you stand on Reliance Industries. Given the fact that we have seen that come back, they're moving aggressively in the retail space as well. What's your outlook on RIL?
The outlook is clearly positive. I think the market has not given any value to any of its new businesses, whether it's green technology or its platform business. And clearly and also, so all their businesses are humming really well, whether it's retail, geo, or their traditional O2C business. So in the current environment, India still is growing at 6.5% GDP, and still oil prices are at $85, which is a very good number from a refining perspective. So Reliance looks very good.
In deposit growth and the credit growth, I guess, is the highest in last 10 years. Do you see that gap narrowing down, which means growth has to come down or deposits have to go up?
Well, it is narrowing down. You've already seen the credit growth come down a little bit. Our view is, and as you would see, while the bulk deposit rates had caught up with the increasing interest rates earlier, so I do expect that in the system it might take a couple of quarters to play out, but hopefully people will see value in putting money back into the banking system and the deposits, because some of the alternates might be as expensive or giving the similar returns as what the banking system is giving. And if it does not happen, well, at some stage the credit growth has to be tempered. There are no two ways about it.
On the clock, that means it's time for stocks on the editor's radar. Let's get straight to it then and discuss two banking names then. And first up, we've got Bank of Baroda. That PSU is in the spotlight. It came out with its operational updates, and going by the kind of numbers of and that it's given out, it has been fairly encouraging.
More than the operational numbers, Avan, I guess Bank of Baroda is now clearly all set to occupy the second spot in terms of the PSU banking space. It's about SBI. It always gets lion amount of market attention, lion amount of mind share. But the minute you talk about the second largest player in the second largest bank in the PSU banking space, it used to be PNB, but now I guess both in terms of universal acceptance by shareholders and also in terms of growth, Bank of Baroda is right up there. Relative valuations are cheap, growth is relatively superior. So which means that for Bank of Baroda now to really edge higher and outperform the entire PSU banking space based on pure growth and the underlying valuation and asset quality, I guess is a very easy call to make. So Bank of Baroda has been an outperforming stock for last 1 year, and I would imagine that closer to 160, 170, there is merit in revisiting the stock again.
All right, merit in revisiting it, and you have that view being endorsed by Citi as well. They've got a buy note, buy recommendation on Bank of Baroda. Let's move right on then and discuss the other private sector bank, and that's Kotak Bank. And that's interesting because it's in the spotlight today. The FII holding declining now to 41.2%. The foreign headroom as well could move to about 25%. What exactly does this imply given the year-to-date performance for Kotak Bank?
Look, Kotak has been a lazy stock in terms of market outperformance, but this is one stock which global financial institutional investors, they love to own, and they've been owning Kotak Mahindra Bank and HDFC Bank for years now. Historically, we've seen that every time when the threshold limit has changed or the FI threshold limit has changed, when there's a window where FIs can invest again, those windows normally are gobbled up by global investors who've always been wanting to buy stocks like HDFC Bank and Kotak Mahindra Bank. I guess what this means is that because of the headroom window opening and the changes, fresh inflow of about $50 to $75 million into Kotak Mahindra Bank by global investors in the next few days cannot be ruled out. How much of that will have an impact in terms of the stock price? Difficult to gauge, but in terms of in proposition, $50 to $70 million easily could come back into Kotak Mahindra Bank by foreign investors. So foreigners investing does not mean domestic will not sell.
Yeah.
So, I mean, there's a buyer and there's a seller.
Right.
So it's not that, someone's going to take the stock and there would be no seller. But yeah, technically speaking, the news is that there's logic to assume that $50 to $70 million could come back into Kotak Mahindra Bank.
Okay, that's the kind of inflow expected into Kotak Bank. All right, let's move on and hear it out from Sandeep Tandon as well as he shares his views on sectors that he's bullish on.
So, in terms of manufacturing, is a very large thesis because we are talking about the way some of the global macros or the global economies are getting affected. So that generates a huge opportunity in India. So because manufacturing itself is a very large theme as a concept, so we like to capitalize on the individual components. Obviously, by default, banking is the first component which becomes very important, both private sector and public sector. That's one important theme. Then if you look at the infra themes is also should do very well. This has been a big most neglected theme for last many years. The stocks opportunities are very limited. Yes, capital goods has moved up significantly and most of stocks are becoming relatively expensive. So I think it's an opportunity in the auto ancillaries, another opportunity one should look at. So capital goods, the large caps names have outperformed and they are expensive, but there are many such opportunities available in a small and mid cap if one to shut down and analyze. So auto ancillary, power, if I have to look at the infra in general, I think these are the larger themes, and this list is can be very large. So one has to spot the opportunity on individual names rather than saying one sector or one thesis which has played out. So if you really look at, if we are constructive on the infra, then cement by default become the first choice. So we are holding a very large exposure in some of the large cap companies and some of the mid cap companies also. So we are very constructive on the space. This quarter, in terms of volume growth, will be very good, may not be great in terms of margin. But if you look forward, let's say, talk about next 1 or 2 quarters, so going from the, let's say, FY24, financial year 24, I think it should be more constructive because we expect even margin expansion because energy prices has corrected a lot, so which will help them. Demand is anyway picking up. The only concern which we have, that extraordinary capacity announcement which has made by all the players, that they will go to increase their capacity by 30%, 50%, 80%. That is something which is slightly scary at this point in time. But one has to look at whether it really get implemented or this is just an announcement, because to implement this side, it takes time. So from a near-term and medium-term perspective, we are very constructive, but too mature to talk about very long-term thesis given the extraordinary capacity which is being talked about.
All right, let's move on then and get you an ET Now exclusive. Put the spotlight then as we learn from reliable sources that Ugrow Capital is in talks with global as well as domestic insurance companies in order to raise funds. My colleague Ajay Sharma joins in with all those details on the phone line. Ajay?
Well, that's correct, Awan. We are gathering from our sources that Ugrow Capital, which has informed the exchanges of its fundraise plans, is actually in talks with global funds and domestic insurance companies. And within global funds, we understand from our sources that Sovereign Wealth Fund of Denmark is one of the big investors, and also domestic insurance companies. And out of them, Prem Vatsa-backed domestic technology, tech-backed company, GoDigit, which is essentially a completely technology kind of insurance company backed by Prem Vatsa, is also likely to participate in this fundraise. So they are aiming at around 400 crores in a combination of QIP and preference issues. And our sources are telling us that large part of this will come from Denmark Sovereign Wealth Fund, and then the rest will be divided between GoDigit and other insurance companies based in India. So this announcement is expected shortly. There's a board meet today to finalize this. And when we spoke to the management about this, they said that since they've informed the exchanges about the fundraise, any details or any response on this is possible only after the board meet is concluded. And we understand by 12 o'clock this announcement should come. So they had recently guided for a 3 times jump in net profitability by next year. So 75 crore PBT may become 220 crore. So it is a very high growth space, and probably that is the reason why these global funds are interested in investing in Ugrow.
All right, Ajay. Great news break. Thank you for that. Chakri, what's your view on NBFCs? Interest rates are peaking out. NBFCs normally outperform when interest rates are either on threshold of peaking out or they've peaked out. Is it time to go back to Bajaj Finance, Aditya Birla Capital, Ugrow, or for that matter, IFL Finance?
NBFCs are clearly well positioned because we seem to be close to the peak of the interest rates, and also the demand is holding up fairly well, loan growth, that is. And against this environment, Cholamandalam Finance, MMM Financials, these companies clearly benefit. Commercial vehicles loans improve first, and also rural sales improve, are expected to do well. So MM Financials, the financial services, Cholamandalam, Shriram, all these companies are looking.
What do you own? And what are you planning to buy?
We currently are buying MM Financials and Cholamandalam Finance.
Naresh, good old Zomato. It moved smartly in the second half of trade yesterday. Every time a stock like Zomato goes higher, traders, they get excited. Is Zomato now looking strong for another 5%, 10% from here?
So, I'm very constructive on Zomato in terms of the price action which has been happening. It's a strong base building formation. So the stock was at 50 rupees back in May of 2022, and we are still at their prices. Now, if you look at the recent last 2 months, it's made a base around 50. There are 3 bottoms in that last 2 months. And there is a upper band of resistance around 57, 56, 57. Once that breaks, that would be a flag breakout. I would expect a target price of 65 to 70 back again on the stock. So at these prices, the stock looks very promising. At 53, 54, one can keep a stop loss at 50 and expect a test of 70, which is a solid risk reward. So technically very positive on it. And also the fact that it has gone through a consolidation, a sideways consolidation for almost a year. That's generally a good indication of a basing out formation. So extremely bullish at these prices given the risk reward.
Meantime, fresh brokerage note as well out. Jefferies has come out with their take on the auto sector. They're positive in the midst of the strong earnings cycle, and they believe that there's going to be an 11 to 18% CAGR for passenger vehicles as well as two-wheelers and trucks over FY23 to FY25. So they're bullish on Ashok Leyland, Bajaj Auto as well as Tata Motors, and have pretty strong target prices as well on these counters. Chakri, wanted to get in your take. Where does the outperformance lie? What's the expectation when it comes to the earnings this time around? And what kind of, top line growth margins are you penciling in for autos?
Yeah, if you look at basically autos, there are two things, growth drivers. One is the traditional driver, and second is the EV. Now, the EV, whether it's domestic or international, global, it's only about 5 to 7% sales depending on the market. So, which means you see the traditional petrol, diesel, very important component, and also clear plans for EV. In that bracket, Tata Motors fits well. It has good products on both sides, as well as this is in the passenger vehicles, four-wheelers that is, as well as now increasingly into other platforms. TVS Motors, very good range on both EV as well as in the traditional bikes. So these two companies, I think, are extremely well situated for both the present sales as well as in the future outlook of EV growth.
Okay. Meantime, let's get in your take as well, Chakri, as to what the outlook is when it comes to the tech majors coming out with their numbers. TCS, Infosys, they'll be kicking off the Q4 earnings season, of course. What is it that you're working with when it comes to margin growth expectations, the kind of guidance that we could see from some of these companies, and how you're looking at the valuation picture?
Because of the recent turbulence in the US, because of the US banks, there is some kind of hesitation that therefore some amount of their contract negotiations, new orders would have kind of slowed down. Now, even if we assume that does happen, because there is a moderating amount of attrition and various other factors, the margins are likely to improve for the sector and for TCS. They should improve anywhere between 50 to basis points to about 1%, depending on the company. And so the order flow for this quarter, even though if it is muted, even though it shows a slight deceleration, this is only a quarter or two phenomenon. They are looking good. Valuations are close to their long-term, below their long-term averages, and for a higher level of revenue outlook growth, and therefore would be clearly buyers if there is any weakness in the IT pack.
Now, the interesting bit here is that if one looks at the P multiple, and we're looking at the 5-year average, which includes a COVID crack and a sugar rush after that. So 5-year is a good time to understand a cyclical sector or a cyclical sector like IT, because IT is cyclical. We may call IT as a trend, as a linear trend, but while the need for IT outsourcing, all that will continue, but within that there is deep cyclicality, what we must realize. IT stocks are not very cheap. They are in and around their 5-year averages, and at a time when next 2 or 3 quarters of growth is going to be compromised. So Chakri, my point is, this is not my data, Chakri, HSBC's data. IT companies are trading in and around their 5-year average. And for a sector where growth is going to be contracting rather than expanding. So then why should one buy them at all?
Yes, and the two things have happened for the IT sector in the last 5 years. Both good and bad. We've had COVID, we've had therefore increased demand for IT. Then you had all the new push for machine learning, AI, etc., which is again another revenue push. And then the negatives, which is all the recent bank crashes, bankruptcies, and slowdown in the US and the West. So the demand push for both MI, machine learning, AI, all this are very strong, adding to the revenue growth is far higher than what is being taken off because of the slowdown over the next 2-3 quarters. You're absolutely right. Next 2-3 quarters is likely to see, in fact, and probably an earnings cut as well. But since the growth outlook top line is better than the 5-year average, the 5-year average multiples look reasonable at this point in time.
Nuresh, what are the chances that this time IT could actually be a sector where you actually sell the rumor and buy the news? Normally you buy the rumor and sell the news, but in IT it could be the other way around, which is instead of going with the consensus bearish view on IT, one should actually be looking for a contra trade here. Nuresh, IT, long before the trade, long before the earnings season.
So ideally, given that the expectations are low, so the best trades happen when the expectations are low. And this is what has happened generally with IT. Say in 2021, the expectations were high. Any bit of disappointment, and we saw big corrections on the result day. So currently we are placed on a similar scale for many of the large cap names. May not be the case for some of the small cap names. So something like a KPIT Tech and say a Persistent do not have room for disappointment. But if we look at a Wipro or a Infosys, a little bit of a, say, better performance than expected could lead to a bounce back. So the trade should be, if you're looking at contra, it should be large caps as a contra rather than small caps as a contra.
Your views on the tech sector, where does your preference lie? We'll now be closely eyeing these names in light of the earnings season coming.
Even Wipro, for example, I think has been struggling to give any kind of a major recovery or any kind of a trend pickup over the last many months of this price correction for itself. Again, this stock is reeling below its 200 moving average since quite some time. So the fact that these stocks have been unable to break past about those levels makes investing into these stocks, or at least trading into these stocks, expecting a trend a bit more volatile kind of a strategy. I would wait out for a confirmation. So even if, say, post results, these stocks rise up by 5-7% and then come closer to their long-term averages and break past about those levels, I think that's a better strategy to wait out for that breakout rather than anticipating any kind of a breakout.
Right. Kunal, we were talking about the realty pack yesterday as well. That big breakout after the Q4 updates coming in from, both Godrej Properties as well as Shobha. And the entire sector was holding out, even the non-F&O names. Any opportunity here to trade?
So I think DLF is the best opportunity so far in the F&O space. It still looks very attractive on the charts. Now confirmed a breakout of that 400 mark. Maybe if the stock drops back another couple of percentage points, that could be a good entry point back again for DLF, because the way in which the stock has broken past about those 400 levels, 200 DMAs, the volumes which have picked up for the stock price in the last 1 or 2 weeks, I think all of that is very, very interesting in terms of the chart pattern. So that's one stock which I would be keenly bullish on. Anantraj Industries is the other stock which I think also has done reasonably well. In fact, the stock is trading at a multi-week high, multi-month high for itself at the 135 plus mark where it closed yesterday. So again, a very interesting chart from a non-F&O space. So these are two names which I would be keenly bullish on.
Surprise, Kunal. There's no Tata Motors today on your list.
It's not. I mean, from the real estate pack?
No, generally. I mean, Tata Motors were up 7%. It must have made a multi-month high.
Yeah, it did.
Technically, that's great news. You have invested in it. So why is that it's not back on your radar?
There are
but the breakout has happened, no?
We keep on scouting for other opportunities.
So there are better stocks than Tata Motors.
There are better opportunities available.
Chakri, what happened yesterday for Tata Motors? 6-7% higher. Quarterly JLR numbers and the stock went up like a rocket. There was nothing so charged up about those numbers. It was pretty much 10% higher than what the market estimates were.
Indeed, I think Tata Motors traditionally has been a very inexpensive stock. And so and there was a great amount of fear given, slowing down sales in China, Europe, etc. for the JLR. And when that confirmation came, and also given that, its free cash flow profile, if you look for the next couple of years, is fairly strong, etc. And therefore stronger balance sheets, better placed. So all these confluence of factors just was enough of a catalyst to buy the stock.
Tata Motors 461, that was the talk of the town yesterday in terms of where the stock was. Nuresh, Indian Hotels, it made a new high yesterday. It's been on your list every single day.
So continue to like the stock. It's a buy at current levels. I've been recommending for the last 2-3 sessions. If you look at the stock price, the high in February was around 330. The high in March was around 330. And yesterday also we made a top around 332, just a little higher. So clearly a short-term breakout done here. The risk reward is interesting. The stock has gone through that initial move wherein it went from that 150 breakout all the way to 330, 350 levels. It topped out around October of last year and has been consolidating for the last 6 months. So I think the consolidation is over and now we are starting up a new leg which could take it to new 52-week highs. So have a target price of 360 to 400 on this one. And after the last 4 days of consolidation, the stop loss now comes at 320, which makes it a good risk reward trade for the short term and the medium term as well.
Right. Kotak Bank is the other one which is going to be in focus this morning. We've highlighted as to how the MSCI weight may actually rise, as there is clearly FPI and FII headroom which has risen after the latest shareholding which came about. So, let's check in on what Kotak Bank is going to do, and of course BOB as well, wherein the Q4 deposits have come in higher by 15% on a year-on-year basis, and advances as well have risen about almost 19%. But Kunal, just the way the Bank Nifty cooled off yesterday, what is your sense? Is that also going to head into a quiet consolidation phase?
Well, it's already entered into that phase, Aisha. But the interesting bit, which frankly speaking, it's very difficult to comprehend, is the reduction in the open interest with fall in prices. Ideally, we would have seen a very sharp drop in the open interest on a consistent basis with a pause in the prices or maybe a mild uptick into the prices. That's generally indicative of a strong wave of short covering. But this kind of a very sideways, docile kind of moves for the indices with 8% drop, 5% drop on a regular basis in the last couple of days gives an indication that it's a bit of a mixed position for the indices. So and this is the time where we start going into one step back, that we don't look out for momentum on the Bank Nifty. We wait out for the breakouts, or we wait out for a point where the Bank Nifty goes back and comes back into a testing of the previous support. So the strategy has to be tweaked in these kind of time frames. You either wait out for a breakout convincingly about the 41,000 mark on the Bank Nifty, or in case if the Bank Nifty drops back to 40,000 mark, that's a better strategy to buy.
All right, let's get in those mid-cap strategies. Going by the way, the pre-open rates right now, we're looking at 17,700. That's up about 0.5% on the Nifty. And for the Sensex, just about flat, around 59,800. That's the currency at 81.95. Let's find out what those mid-cap strategies are. Kunal, your bet?
So that will be a buy on Anantraj Industries back again. 134.35 is where the stock is trading right now. Closed at a multi-month high as well as a multi-year high for itself yesterday. So it's a rest a buy with a target of 140, stop loss at 130.
All right, moving right on. Anantraj, that's Kunal's top bet from real estate. Naresh, what's your mid-cap call?
So that would be a buy on Tata Chemicals. The stock is on verge of a short-term breakout. The last 3 sessions have seen good momentum. Expecting a short-term move towards 1100, a stop loss to be kept at 980.
Like to thank Chakri then for taking the time out and joining in today. Let's also discuss what are some of the other strategy notes by groups like JP Morgan as well as Citi. And as we kickstart the earnings season, the brokerage firms are reporting their expectations from the March quarter. Pankaj is here to tell us what Citi and JP Morgan are saying.
Well, when we just look at the cover on D Street, it's all about earnings and how people are positioning themselves ahead of earnings. And that's why the 2 notes that have come out today probably matter. Citi has said that their target for Nifty continues to be close to 18,500. So that is something which they maintain. However, they'll say commodities will be sluggish as far as Q4 is concerned. And that's one of the key sectors to watch out for. In terms of a growth, they are expecting a 6% growth in Q4. And as we told you, materials or commodities is something which they believe will be a drag. But when we just look at some of the sectors or some of the things that they are watching out for. So for autos, margins should be on the higher side. Financials should see better NIMs, and IT should see a decline in the range of CC revenue growth. So I think that is something which they are essentially watching out for. The interesting bit is these stocks. ICICI, they believe, will see a broad-based advanced growth of greater than about 5%. Tata Motors, JLR volumes are already out, but that will aid the margin. So margin expansion could be interesting over there. For Pidilite, they believe high-cost inventory will aid their margins. And for coming, Q3 was very strong and they expect continued momentum coming into Q4. On the other hand, you also have Sanjay Mukim of JP Morgan who has written about this. They see decent Q4 earnings growth as far as India is concerned. They have not given a lot of stocks, but they expect an overall EPS growth of about 13% into Q4 versus Q4 of last year. Last quarter, according to them, was all about commodities, impact on raw material. This time around, mixed margin outlook is what they have, and volume trend, and if any impact on that is something which they would watch out for. In terms of sectors, what they like, how they continue to see. So firstly, they believe that margin pressures will continue across the board for cost inflation. But financials is a space that they like because there the growth will be on PPOP, that's pre-provisioning profit growth. And that is something which they believe on a core basis would continue for financials.
All right, thanks very much. That's the JP Morgan strategy. Let's move right on, and here are your other top headlines to monitor. And Apple's global computer shipments, they've fallen 40% in the first quarter year on year amid the broader contraction in consumer demand. Now remember, overall, the global computer shipments have fallen 29%, with Apple having taken the largest hit. The Mac shipments were almost cut by half, down 40.5% from 6.9 million computers in the first quarter, just 4 million in 2023 so far. Moving on, the US and Philippines have launched their largest combat exercises in decades. that's going to involve live fire drills, including a boat-sinking rocket assault in waters across South China Sea and the Taiwan Strait. The annual drill is going to run up till April 28th and involve more than 17,600 military personnel. Remember, it's going to be the latest display of American firepower in Asia. Meantime, a quarter of a century since the signing of a peace deal that largely ended in violence in Northern Ireland, the British Prime Minister Rishi Sunak has said that efforts had to be intensified to restore the power-sharing government central to the accord. Meanwhile, the US President Joe Biden is set to fly to Northern Ireland today to attend events marking the 25th anniversary of Northern Ireland deal.
And 8 Chinese Navy ships remain in the waters around Taiwan after the end of 3 days of war games. Although China said on Monday that Monday night that the drills had ended, Taiwan's defense ministry said that 8 Chinese ships remained in waters around the island. Meanwhile, Taiwanese government has repeatedly denounced the drills. Also back home, BMC has made masking mandatory in all BMC hospitals amid the rising cases. The decision was taken after a meeting on the surge in cases in COVID. The civic body has also advised employees to wear masks in public places. A mask advisory has been issued for senior citizens as a precautionary measure, and private hospitals have already made masks compulsory in their premises. Also, the first phase of X-Scope India 23, which is a bilateral air exercise between the IAF and the US Air Force, commenced yesterday. Now, this phase of the exercise will focus on air mobility and will involve transport aircraft and special forces assets from both the air forces as well. The move aims to enhance mutual understanding between the two countries and share their best practices.
All right, and a snapshot of the big exclusive then, the CEO of and MD of Axis Bank, Amitabh Chaudhary. And besides sharing his outlook on the bank and the industry, he also shared his personal views on life beyond being a banker.
This is something I've not discussed with Mr. Chaudhary, so this is going to be straight out of his gut. Aditya Puri.
World-class franchise builder.
Shaktikanta Das.
Strong, steady hand.
Infosys when you're managing Progeon.
One of the best times I had.
HDFC Life.
Another great innings for me. A lot of learning.
Axis Bank, HDFC Life, Infosys. Best stock to buy.
Obviously Axis Bank. What else am I supposed to say?
Axis Bank, what's the first thing that comes to your mind?
Thoroughly enjoying it. Looking forward to more.
Extension? Chat GTP.
Interesting and worrisome.
When you're not thinking, what are you doing?
Oh, listening to music, reading books.
One book which you've read again and again.
No, I'm not there as yet, but I need to read a book again and again. No. Enough books to read.
Which is your all-time favorite book?
Rise and Fall of the Third Reich, because I think it gave me a very different perspective on what the World War was about. I used to be a great Osho fan, so a number of Osho books were quite revealing.
What's that one thing you think has been the most challenging time for you in your current tenure?
Well, I think the acquisition of Citi was quite challenging because we did it at a time when, firstly, we did it in a time frame which was shorter than what we had told the market. This institution has been around for 120 years, deal of a lifetime. We got 97% of employees to come and join us. The day one went extremely well. Looking forward to the next 12 months when we'll have transitioned the customers to Axis Bank platform. Very, very complex deal, not difficult, complex deal. And I think I'm very happy that we have done a great job till now. I think half of it is over. The more important half is still to be done.
I also want to look at the stock of Ugrow. Ajay just broke that story that there could be big capital infusion from some of the big marquee investors, and this, I guess, could be the typical part. We are the tipping point for some of these NBFCs where global investors are now chipping in. A case in point here is how Poonawalla Finance now has become a big NBFC after the Poonawalla group acquired it. That's Ugrow for you. It's up 3%. But I mean, what DT now has learned that there could be a large capital infusion and the announcement could be as early as today. Watch out for this stock. Axis Bank, I just want to mark that stock. The sense which I got from Amitabh Chaudhary was that the best of the credit growth clearly is behind the banking sector. But there are no NPA concerns whatsoever. It's largely because of the gap between deposit, that's the liability franchise, and credit growth is so large that banks will be forced to bring their growth down because there would be a huge asset liability mismatch otherwise going forward, something which Indian banks are well aware of, something which US banks or US regional banks actually ignored. And you saw an episode like SVP where they were lending without realizing that they don't have backing. So I don't think that risk is there with India. At best, you may actually see growth slowing down. Bank of Baroda and Kotak Mahindra Bank, two more stocks. We just a coincidence that we're talking financials. Good guidance. And the stock reaction, 7% higher. Kotak Mahindra Bank, 5% higher. $50 to $70 million could easily come back because of that threshold limit change and because of the MSCI rejig, and I guess markets are really recognizing that. So it's going to be an okay day, Aisha. 600 points on the Nifty already, but looks like we could add another 100 points more looking at the opening tick.
Oh yeah, absolutely. Kotak Bank, especially given that the MSCI weightage may actually increase after the latest headroom that's provided post the latest shareholding changes by FPIs. Kotak Bank has gapped up about almost 5% as we speak. There's also SBI, by the way. They're looking to consider raising about $2 billion in FY24 via unsecured notes on April 18. The board is going to be meeting, so that's another one in focus. Nikun just highlighted BOB. The Q4 update is strong. There's also Vedanta, wherein the Supreme Court has allowed the company to carry activities at Sterlite Copper Plant in Tamil Nadu. So that's going to be another stock which is going to be in focus. And then L&T Technologies as well. That perhaps is the only laggard, or perhaps could be a laggard today. The news flow is not the strongest there, given that they have to pay almost 81.5 crore rupees to the US Justice Department to settle some of the visa allegation cases. So that's that. But the market construct is looking very comfortable. 17,700 already on the pre-open.
And there are still a lot of naysayers. You ask anybody that, okay, what is the market view? They would say, okay, 600 points higher. Now looks like we are nearing the end of the short covering bout, so to speak. Nobody is using the word a rally or a rise. Everybody is still convinced that there is going to be more like a short covering bout per se. And there is this non-participation, I think, always fuels the market to go higher. Disbelief, and these are the words which I guess in a sense are capturing the market mood right now. It's a firm start. It's a solid start. 50 points higher for the Nifty, but the market breadth absolutely near perfect. For every one stock that is going down, 11 stocks are going high. This is the kind of market breadth you saw at the, when we were in the 2021 kind of an epic bull run. You want to see such, more market, you want to see such broad participation. That in a sense will only induce more participation. Stocks and news, Bank of Baroda, 3% higher. Kotak Mahindra Bank, in terms of percentage, 75 rupees higher. Both these stocks are off to a good start. You want to also look at Zomato, simply because of price action and the kind of price action what the stock saw yesterday. It's off to another good start. Domestic pharma companies could come out with good numbers, largely because considering that the quarter gone by, in a sense, unfortunate it may sound, but you did have a spike in viral and influenza cases. So companies like Cipla, Dr. Reddy, largely do these two. Sun also do some extent. These are companies which in a sense have a very strong anti-influenza portfolio. So those are the ones which actually would benefit. But the real top draw, Aisha, has to be Kotak Mahindra Bank.
Oh yeah, absolutely. Kotak Bank all the way. BOB, SBI, these are all the other banking names which are also in focus and holding out quite okay. For the Nifty as well, it's almost a 17,700 thereabout kind of start. I don't know whether this is the high point that we made yesterday or not, and have we opened above that level? We will just check in with our chartist. IRB Infra, the March toll collections have risen about almost 20.6%. They're almost at 370 crore rupees. So IRB Infra is the big mover this morning, 3.25% higher as we speak right now. And the IRB InvIT Fund as well, wherein the March gross total revenue has come in higher by about 9%. There's also Glenmark. That's another stock which is in focus. A couple of newspapers are reporting that they are looking at selling a majority stake in Glenmark Life. So Glenmark has started off almost 1% higher as we speak right now. And Shilpa Medicare too, which has got a recent US FDA nod for one of the tablets. Neogen Chemicals, we were highlighting this stock since yesterday, exclusive to us. They're looking to acquire manufacturing tech license for electrolytes from MU Iconic Solutions, or Ionic Solutions rather. Neogen starts off with a gap up 5% higher as we speak right now. But for the index, Kunal, what can you tell us? Where are we likely to head today?
So I think it's a good start again. 17,700 is where we are testing. So hopefully, if we manage to sustain about those levels, then I think that mild bit of pause could probably be over for the indices, and we may expect a upward trend. Good set of large cap names participating back again on the indices. One of the stocks which I would be looking to recommend to clients as well as being a bit more aggressive on the upside would be RBL Bank. I think the stock is on the verge of a breakout above this 144 mark, inverted head and shoulder pattern. So that's a stock which I would be bullish on, would look to trade.
Okay, Naresh, what about your first trades? What are you punching in?
So adding on to Bharat Electronics, BEL, overall the PSU pack again has started looking interesting in terms of momentum. So BEL is again back above 100 levels, so that's a positive signal. So expecting this to go slowly towards 110 to 115 in the short term.